Welcome back to the Capital Mindset Podcast, everyone. Hope you guys are having a great day as always, whatever time it is that you are listening to this. Hopefully you have a nice drink next to you, whether it be a coffee, a water, whatever floats your boat, really. So today's episode, we're going to be focusing on China. So China's been making headlines, and if you don't live under a rock, you've probably been seeing, well, what's been happening with Xi Jinping consolidating power and the implications of this on the wider market. You probably have seen stocks like Alibaba fall 12% in a single day, JD.com following similar movement, and Tencent as well. Not even mentioning the smaller Chinese companies that perhaps had even more volatile moves than the larger ones. Now, you guys probably know, if you're listening to this or have been a Capital Mindset follower for a while, my thoughts on Chinese markets as a whole, or these VIE ADRs, okay? Specifically, VIE is an umbrella term, and my concern regarding the Chinese VIEs has always been and will always remain the fact that you own quite literally nothing. And we won't get really into that because today's focus is going to be mainly on the political developments actually occurring within China. So as I mentioned just recently in the podcast, Xi Jinping has consolidated power, it seems, removing those who are seemingly his rivals in the CCP. And we'll talk about that because that has huge implications across the world, not just in China. For now, let's begin just in China, all right? What does that mean, right, when you remove people who think differently from you? What does that mean in the Chinese context? That's very important. Well, if we go back farther enough, we know that China went through a period of, let's call it Maoism, under Mao Zedong, right? He was at one point deified, but we won't get into that part of the history. Just focusing on the policies per se, kind of focusing a little bit on the political philosophy of socialism, communism, capitalism. So for those of you, let's first start with a brief definition. I think it's important that we define these words before we progress through this conversation. So as per this podcast, we will define socialism off of basic socialist literature, where the state seizes the means of production in an effort to transition the state towards communism. Communism, for the sake of this discussion, will be defined as a stateless society where everyone is presumed to be equal, there is no currency, and again, like I said, no state. Capitalism shall be defined for the purpose of this conversation as a state by which the individual can own the means of production. Okay, it's important that we establish the definitions because in modern discourse, everyone, defines their things their own way. So no one ever knows what we're really talking about. So as I've just laid it out, we shall continue the conversation. Okay, so China. China is ruled by the CCP, the Chinese Communist Party. But much like the Soviet Union, USSR, which, by the way, has socialist in the name, because to call a state a communist state is actually oxymoronic according to communist literature. By the way, you can be ruled by a communist party because the communist party has the goal or intended goal to one day achieve communism. And this is the case quite literally if we just take the words of the CCP to heart. This is exactly what they say. Okay, so we're just going to use their own words in this discussion. Okay, so we have many factions, just like how we have in many countries around the world. Different political parties can be subdivided into different factions, all vying for power. Well, the CCP is no different. You have the traditional Maoists, we'll call them the princelings. That's what we tend to call them in political science, I guess you could say. So the princelings, what you need to know is Xi Jinping, he is one of the princelings. He's not the only one, but he's the most prominent one as he has ascended to power. And on the other side, we have what we call the technocrats. These are the ones that, as well, many of my audience are probably young millennials or Zoomers even, but as you were growing up as a Zoomer or a millennial, you heard that, China is run by engineers and people who think very scientifically about an economy. Well, these might be the propaganda you heard about the technocrats. So the technocrats were ones that were more willing to adopt Western economic philosophy in an effort to improve China's well-being and financial health, right? What I mean by that is they were willing to adopt capitalism to a limited degree, and they had even some areas of China designated as free trade zones where you had probably more capitalism that you could even find in the West, funnily enough. Now, these parties or these factions were vying for power, essentially, as always, and for the time being, the princelings were tolerating the technocrats as long as it benefited, or they perceived to benefit, China. And if we remember, if we go back in time to October 2017, this is a very important time. Well, this was the 19th Party Congress, okay? And we first started to see the dialogue change, a shift in dialogue, but people didn't pay attention around that time. And frankly, I didn't pay attention around that time either. I think now it's more highlighted because we're all paying attention to it a little bit more. But Xi Jinping was true to his words. He stated as such that the country needed to shift back towards the older style, more prosperity for all, he calls it. So this is kind of the sign that, okay, well, Xi Jinping outlaid the strategy. He outlaid what he wanted to do going forward. Who are we to say that he's lying? Who are we to say that he is mistaken or not telling us the truth? Why not take his word for it? These are questions I guess we can ask ourselves now. Now, we have other people. We have Jiang Zemin. I might be butchering the name, by the way, so I apologize in advance. But Jiang Zemin established 3 goals: the development and needs of China's advanced productive forces, onward direction towards an advanced culture. This is more of the nationalistic vibe. And then number 3, the interest of the majority of its citizens above those, let's say, of the minority. Of course, we're not talking about themselves because their interests come first, above the majority too. But let's just leave it at that. Okay, so on the other side, we have, again, the technocrats. The technocrats, we have people who perhaps want more to do with the West than, let's say, the princelings. And we have, again, apologize for the butchering of the pronunciation, but Hu Jintao. Okay, Hu Jintao is by far considered perhaps the most powerful of the technocrats. Okay, he is perhaps what you would ascribe the responsibility to the China that you think of. So you go back, let's say a decade, and you think, well, China's this fast-growing economy opening up to the West. You're probably ascribing to the policies of this individual, just so you know. So under that context, it's important that we kind of figure out, well, what happened? What's changed? What has changed throughout that time period? Well, we saw a global recession in 2008, and this, of course, affected the markets for years to come, right? It affected the political structure around the globe. And at some point, we all know that countries around the world began to question and even sometimes reject globalization. Well, China was the primary benefactor of this globalization movement. And under such change, it appeared that China began to slow down. And remember, we have to consider this. The government of China doesn't really tell us the full story, do they? Unless you're willing to believe that they do, which by case I would say I'd really kind of question that or at least think about that for a moment. Do they really tell you the full numbers all the time? So we know that they might have access to it. And in doing so, they might see, okay, well, we're developing some questionable economic growth. And we talked about this in the past in other episodes before the blow up in China real estate. I think even Western media covered the story rather well. Okay, I got to give credit where credit is due. There were individuals in the United States, in Europe, who were covering the real estate bubble that was in China. And it was blown off by some, yes, but I think it was well talked about. A lot of people were pointing it out. Okay, it wasn't that Evergrande was a surprise. People saw and there were documentaries dedicated to the bridges built to nowhere, the empty ghost cities that China was building and no one was living inside of, yet people were purchasing the real estate. Well, that doesn't seem sustainable. Yet that was probably attributable to a lot of the growth, not all of it, but a lot of the growth within China, right? Because we talk about that durable goods investment, right? Non-durable and durable goods. Well, that durable goods investment, just as in the United States, we show it to be a very important indicator of macroeconomic health going into the future, right? And as we see that decline right now, we already talked about in live streams and in videos how that's problematic, and that's part of the stages of how we get into one form of recession. Well, in China, that's no different. It doesn't elude the rules just because it's China, which, by the way, we can get into that exact discussion about the VIE structure because seemingly people kind of give China a different look because of it being China. Well, Xi Jinping has addressed, again, going back to the discussion, that he is willing to go back to more of a Maoist type of regime, whereby which the country shifts more towards socialism. Again, going back to the definitions we used in the beginning, where the state will control the means of production, and hopefully, to their ideology, right, hopefully in their perspective, they hope to achieve communism in this way, which the state will achieve common prosperity for all. Now, there is the socialism with Chinese characteristics. So there is a focus of enhancing Chinese culture, specifically Han Chinese, which is another key point they usually talk about. They say socialism with Chinese characteristics. So point being, we saw recently the footage of Hu Jintao, one of the most powerful technocrats. This is not to be just discarded. This is a very important fact. Hu Jintao was escorted out of the conference. Now, this would be, let's say, the equivalent of our Congress meeting, and let's say a former ex-president was attending. But let's say this former ex-president now has another office, but they are a former ex-president. So this would be akin to, let's say, the leader of the Democratic or Republican Party literally being escorted out of the Capitol building. So that's the level that we're basically describing right now, right? That's what happened. And one thing to note, this is just rumor, so I don't know if this part is true, okay? But supposedly, that footage was only shown to the West, as in it wasn't shown internally, which, if you know anything about the CCP, you know everything is intentional and very symbolic too. So these Congress meetings, these party Congress meetings that they host, they're very choreographed. Everything is laid out. So this was a surprise. You could see that in Hu Jintao's face. He was not told that this was going to happen to him. Well, what does that imply? Let's break that down for a minute. If you made something or you did something and you made it so that it wasn't really meant for your people to see, who was it meant to be shown to? And why? That's the big question. Well, I think it's rather simple to conclude. It was a message. What kind of message? Well, I think it was a message to the West saying, hey, we are rejecting the old way. What is the old way? The old way is accepting and opening up. That is not what Xi wants. That is not the direction Xi is going to go. And he's telling us that. He's telling us that symbolically by doing so. And so we kind of connect the dots there. I don't think it's very conspiratorial. I think it's pretty clear. I mean, we're not conspiring that this happened. It clearly did happen. We all witnessed it. Now, if it is true that this was not shown inside of China, but only shown to the West, then I think it's a safe conclusion to say that this was a symbolic move by Xi to kind of tell us something. And he's also been removing some of the other Huists, let's call them. And so Huists are the people who align with the same beliefs as Hu Jintao. So just to clarify that. We also had the central bank authority basically not be considered for another position, and was actually not even considered as an adjacent, right? Or someone who would potentially replace him in the future. Just completely removed. And Xi has been implementing people of his thought process into positions of power. So it's safe to say that what the vision Xi has for China is the vision we are going to see in the coming future, which is a bit probably more militaristic, a bit more hostile. Remember, keep in mind that Hong Kong and Taiwan are tied to the legacy of Xi Jinping, which I'll take advantage and speak on Hong Kong for a moment, okay? Only from the perspective economically of trade, global trade. So Hong Kong is a very important strategic location for China. Well, in what way? Okay, let's unpack that for a moment. Well, Hong Kong is one of the banking centers of the world, one of the largest banking centers of the world, banking cities, okay, banking centers, let's call it. And China needs Hong Kong for that specific purpose. It is the link between all markets around the world. If you look at settlement trade of currencies, it typically follows by economic size. Well, and I just said that, maybe you guys can guess right now, which country breaks that rule? Well, the answer is China. China breaks that rule. How so? Well, China is the second largest economy of the world by nation, right? We have economic zones like the EU, okay? But by nation, it's number 2. So in terms of currency settlement, we should see it reflect its relative size as an economy to the world. Well, no, we only see it at 1%. Well, that's an ominous sign. That is strange, don't you think? You would think that, okay, if something breaks the trend, we would question it a little bit more. But people don't really question it all too much. I mean, I guess you do have some people out there who do, so I'm not going to say it's not. And there are plenty of economists who've addressed this point, but I think it's not just widely questioned. Let's just say that. So you might be hearing this for the first time, maybe not. And if not, I'm very happy to hear that, because hopefully more people know about this. But yeah, the settlement percentage is, I think, 1% or less than 1%. It's around there, so I'll be safe and give it a range. It's in the single-digit percentage points. I'm definitely correct by saying that. And so that's strange, right? The U.S. dollar is about 40-ish%, which is pretty strong. And we kind of say, okay, well, what does that mean? Well, Hong Kong presents that opportunity, that place where the renminbi can be exchanged for basically all currencies around the world. Otherwise, it's not really doable. No one really wants the monopoly money known as Chinese renminbi. And actually, if you've noticed the exchange value, we can see that it's been much more difficult to get renminbi for dollars now. Okay, so, actually, reverse that. Sorry, dollars for renminbi, right? It's the currency itself is suffering. Well, why is that? Well, the bond market, the money markets are telling us, wow, that thing with Xi, that's crazy. And so, I'm oversimplifying perhaps the actual thought process behind bond investors, but pretty much more or less somewhere along the lines, that's what they were thinking. Dang, that's crazy that he's doing that. I can't believe it. Well, yeah, it is kind of crazy. And so when you really put things into perspective, okay, add everything together. Well, previously, a lot of the thesis around Chinese tech companies was perhaps more centered that they're a growing economy. And I think if you're an American, you're probably hopefully thinking this, wow, we got really lucky that they're shooting themselves in the foot, which is pretty much, as far as my opinion goes, I think that's where we really did get lucky. They ended up doing it. And, more of going onto a philosophy rant here, but it does seem that totalitarian regimes have suffered from the problem of the noble king. Okay, so as long as you have the noble king, you're good to go. But the moment you don't, the moment you have that guy who makes a mistake, well, they have absolute power over policy. And because they have absolute power over policy, it can be very volatile. Okay, and so the enlightened king is no longer there. Instead, you have the tyrannical buffoon, let's say, and can really make a muck out of things. So I think the United States as a nation was always set to benefit from just the uphill battle that China really had to fight, that they always had to have the enlightened king in power. And the odds are eventually you're going to roll an unfavorable leader. And we'll see what happens. But right now, I'd say as far as Chinese companies go, Chinese stocks like Alibaba, JD.com, they remain uninvestable, but they were always uninvestable for me. But I do expect this. So be very clear. Okay, I want to be very clear about my expectations. I do expect the Chinese government to come out and I could be wrong. And if I'm wrong, that means that they are really putting gas to the pedal. Okay, they're really slamming the pedal down, and they're going in this direction faster than I could have even thought of. But if they don't, if they don't do this, but what I think they're going to do is they're going to do token buyback announcements or special dividends of some sort, and the Chinese government, the Chinese or Xi Jinping's administration is going to come out and say favorable business statements or statements that are favorable to business. And this would perhaps put more faith in their cap. Remember, the Chinese government specifically will probably care, if they're thinking about capital raising and capital extraction from the West, they do care the share price value of what their stocks are trading for in the West, because the higher the share price, the more they're able to collect when they issue new shares. Now, remember, not all Chinese stocks are VIEs, restricted stocks, or restricted entities. You can actually go check out the older videos. I do address some of this. And but the ones that are, we can only, I don't even care, but you can only own them through this let's say, creative structure they've created under the umbrella term. It's an umbrella term, VIE, but there's so many ways to create a VIE. There's a lot of things. Disney has VIEs, by the way. Let's think of another one. I think Intel has a VIE structure as well. So you have companies that are exactly VIEs that trade in the United States, like Rocket Mortgage. We have another one that I will make a video on, so I won't mention that one yet. But you also have Interactive Brokers, made a video on that one as well, a European VIE, right? So, and then I had a question come up in one of the videos saying, okay, so my message from your video is all ADRs are bad. And I was like, no. Not all ADRs are bad. Not at all. This is specific to the Chinese VIEs or Chinese ADRs. Tomato in this case. Not that ADRs are exactly the same as VIEs. Again, no. Those are kind of separate prescriptions we will put on each security, right? So an ADR, American Depository Receipt, is not there. An ADR doesn't have to be a VIE. A VIE doesn't have to be an ADR. Those are kind of just separate prescriptions. The VIE is just, again, an umbrella term. We can have local domestic VIE structures, okay? But anyways, so I didn't want to focus too much on the actual structure of the VIE. I just wanted to focus on the political changes, just sharing my thoughts. And again, if you enjoyed this podcast episode, let me know. You can comment on either Substack, which you can see in the description below. If this podcast episode makes it onto YouTube, I don't know if it will, but for sure it's on Substack or on Spotify. I just got on Spotify, and I'm working on getting on Apple Podcasts as well. Basically, any way you decide to consume these podcasts, you can. And these are short little snippets, 20 minutes. They're not as long as the live streams, but they're, as you can see, a bit more organized. So with that being said, everyone, I hope you guys have a great day. Whatever it is you're doing, that you rock at it, you destroy it, and you have a, maybe you're listening to this while you're about to go to sleep. So you hopefully you have a wonderful sleep. And, maybe that's the idea. Maybe I'm trying to do like a finance ASMR. All right, guys. With that being said, I will see you guys on the next episode. Bye.